Hi there, Emmanuel here, and today we're going to be talking about smart money concepts in Forex for beginners. Yeah, so I'm going to explain everything. I'm going to explain what we mean by smart money, and then I'm going to explain to you how smart money, which is just institutions, trade, and how you can increase your chances of successful trading when you trade similar to them and you ride the kind of coattails of the banks, do you know? So just before we go into that though, if you're new to the channel, I just want to say hi. I want to say welcome. If you are enjoying the channel, then if you just want to subscribe, just hit that subscribe button below. Remember to also click on the bell icon so that anytime I put a new video out, you'll be informed and you won't miss out on any videos. And I'm constantly doing that. Anytime I see something I think is going to help you with your trading or making money online, I'm putting some videos out there. So make sure you don't miss out on that. All right, so let's get started. So smart money, what is it really? What are smart money concepts? Smart money in essence is how the bigger institutions, the banks, trade. Yeah, they don't trade like you and I. They're the market makers. They're the ones that can actually move the markets. Let me go on to a chart and show you exactly what I mean. So you say sometimes when you see these big candles like that, these big moves, that's smart money. That's institutions getting involved in. That's banks moving it at that price. And banks move from what we call supply and demand zones because they want to get in at the best price. So if they're selling, they want to get a nice high price so that they make more money as it goes down. Or if they're buying, they want to get in a nice low price and make money as it goes up. And these are called supply and demand zones. Yeah. And people that trade these zones are now considered as smart money traders. Yeah. And in a second, I'm going to introduce you to a group of 5, 6, 7-figure traders that trade this strategy. That trade in this exact strategy I'm going to show you in a second. You can get access to them completely for free, where you can ask questions and stuff like that. And as well as that, you'll get access to my free 10-part Forex training course. And I'll tell you all about that in a second. Yeah. So firstly, I want to show you what supply and demand zones are. So I'm going to actually draw that out here and then I'm going to show you on the chart. So in essence, let's just say this is a zone. This is a zone of price. Yeah. Let's just call that a zone and just make it a little bigger. There we go. All right. And then let's say price comes along. So this would be, if you're wanting the price to go down, this will be what we call a supply zone. And I am going to make more videos on this, but just in essence, supply means you're wanting to sell the price. So it comes up, hits the zone. Then you want it to blow out the zone. Now that's when you know banks are involved. That big candles like I just showed you a second ago, that's bank involvement. Yeah. And usually what they need to do then is come back to the zone to what they call mitigate, get out of their orders, and then they blow the price and continue it to the downside. That is what we're calling a supply zone. Yeah. The opposite then would be a demand zone. Is now where price comes into the zone, again blows out the zone, comes back into the zone again, then off to the races. And this is where you want to get involved in this. Yet demand zone. Yeah. So let me show you that on the charts. All right. So in essence, yeah. So if you're a beginner trader to Smart Money Concepts, you're a beginner trader in Smart Money Concepts for Forex, then you want to do a few things. There's 4 rules I think you should follow when you're first starting out. As you get more advanced, you can be more fancy. But at the beginning, these are the rules you should follow. The very first thing is you should go with trend. Yeah, this is what a lot of mistake people make, because even if you're going with trend, even if you get it wrong, the markets usually can be more forgiving because you're following the trend. So firstly, you find the trend. Which direction is it going? Is it going up or is it going down? In this one, for example, it's generally going up. This is in an uptrend. Yeah, I know it came down here, but generally this bit is moving up. It's got what we call higher highs. Let me go to the daily, sorry. Higher lows and higher highs. So there, that's your low, that's your higher high, it's your higher low. this high didn't get higher than that yet, but this higher low again and then higher high. So generally it's moving up. It's in an uptrend. So if it's in an uptrend, you're then looking for buys. You're then looking for demand zones. So demand zones like here, for example. Yeah, let me mark that out so you can see it nice and clearly. There. This here would be what we call a demand zone. So then when you're in a demand zone like this, you're then waiting for price to come down into the zone like it did here. Just mark this up. Yep. Down into that zone. And then this is the bit now. So you comes into the zone, into the demand zone. Then you want it to blow out the zone. Yeah, that's the second thing. You want it to actually, you want to know that that's where, that is the way to prove that this is a demand zone is the reaction when it gets here. You see this big candle here, it's blown out. This is a big moving candle. Banks have got involved here. They've blown out, and then you want to do what we call breaking of structure. A little bit more complicated, but you want it to break structure. And as I said, if you want to come and trade with us for free for the week, we'll teach you all of this. We'll show you that completely for free next week. Yeah. So it's blown out the zone. It's broken that structure. Now what happens if this happens? Banks are in what we call drawdown. They need to come back to this area now and get out of their orders. They had to plug orders in. They to go down and then up. So they need to come down and do what they call mitigate. So they come back down, get out of their orders, then they continue up, and you ride this part is where you ride it off to profit. Yeah. I'll actually show you a trade that our group is in right now. Yeah. Some people in the group. Again. Demand zone right here. Let me mark it out. Again, make it clear. Right there. Demand zone. Can you see? Again, price comes out of the zone heavy. Boom. Look at this. Look at the price action pushing out of that. That's institutions. That's smart money getting involved. They have to come back to mitigate. Come back. Look at this. Right into the zone. Tiny little drawdown. And then it's shot off. Now, you know, this takes time though. The other thing, the fourth thing, so the first thing was the trend. The second thing was supply and demand zone. The third thing is banks getting involved, the movement out of the zone. And then the fourth thing now is patience, because this is what a lot of retail traders do, especially beginners. You know, they want to get involved. They want to get involved in all the moves, up, down. They don't care. They don't worry about trend. They just see it moving. They'll see a big move like this and they'll just jump in for a sell because of FOMO and things like that. This trade, let's just have a look. So this is a daily chart. This is the demand zone that was identified. This trade would have taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, just under 3 weeks to push out and come back. But now look, now that you've triggered there in this zone here, let's have a look at the risk to reward. So you would have got in somewhere there, stop loss somewhere here at the zone. As it stands now, price right now would just have been, what's that? That's just under a 1 to 4. Yeah, almost 8% increase on your account. And if you're taking it up to the top, which is probably, who knows, but that's probably where I would be taking it up to there, you're now looking at a 1 to 6 and almost 1 to 7. 14% increase on your account, but you would have had to wait 3 weeks for the price to trigger, and then you could just watch it. You know, for however long it takes. It might take another week for this to get right up to there. But even if you got out there now, 8% increase on your account. I mean, most retail traders would bite your hand off for that. And so this is why when you get involved where the banks are, big movements, you get involved in these big movements, you know, because now you're riding the coattails of the banks, which is what we do in our group. And then when you get better, I mean, I don't advise this now as a beginner, but when you get better, you know how to, you can identify supply and demand zone. You know, so here, for example, here, this is a supply zone. Very nice supply zone. I think some people in our group caught this as well. You see, it blew out, banks involved. Okay, it didn't break structure, but banks involved there. Came back, triggered in. Now, big move out there. Definitely would have probably got a 1 to 3 out of that 6% increase on your account, you know. So, I hope that helps. I hope that makes sense. So as a beginner, smart money concepts trader, Forex trader, you need those 4 things. Go with trend. That's the first thing. Second, identify the supply and demand zones. Yeah, and we help you with that in the group. Do you know? Thirdly, make sure that supply and demand, because there's supply and demand zones all over the charts, but make sure that's a zone where banks got involved. You know, those big moves out. And then fourth, have patience. Wait for it to come back into that zone. You know, as you get better, you can go, you know, if you don't want to wait 3 weeks for a trade, you can start, as you understand it more, you can go into the lower time frames. But as a beginner, you should really stay on these higher time frames. You know, they move slower, they give you more time to think, give you more time to see the zones better. So I hope that helps. I hope that made sense. Do you know what I mean? And you understand the difference between supply and demand and institutional smart money trading and retail trading, which is just based on emotions and just whenever the chart moves. Do you know? All right. So I hope you got some value from this. If you did, please take a second, just give it a thumbs up. Also share it with anyone else you think get some value from it as well. You know, if you are enjoying this, or you do have any comments on any of this that you don't understand, or, you know, you just want to ask me anything, then please just leave it in the comments box below. As I was saying earlier, I've got 2 little gifts for you now. If you want access to my free 10-part Forex training course that will teach you about good areas to get in, teach you about how to avoid and stay out of some tricky trades so you're not losing, then you can get access to that by just clicking the link below. You get completely free access to that. And as well as that, like I was saying, you'll get access to the people I trade with that trade this strategy. They trade, and these are 5, 6, 7-figure earners. You can get on with us. The training starts on Monday, 12 p.m. Eastern Standard Time, which is 5 p.m. GMT. You can come and trade with us. Come and train with us. Come and watch how we find these zones. Come and watch how we're getting into trades and things like that. Come and ask questions. You get completely free access for the week. You know, so you can come and have a look. Come and see if you enjoy it or not. If you're interested in that, again, the link will be below. Once you've opted in, you'll get access, completely free access to next week's group. All right, then. Once again, I hope you got some value. Hope you got some value. Till next time. You take care, and I'll speak to you soon. All the best. Take care.